Everyone, and welcome back to Forex Scope, your go-to channel for insightful Forex analysis. Today, we're diving deep into the AUD/NZD pair on the 15-minute and 1-minute charts. If you're looking for actionable trading signals and a glimpse into future price movements, you've come to the right place. Before we get started with the charts, if you're new here and want to stay ahead of the market, make sure you hit that subscribe button and ring the notification bell so you don't miss any of our upcoming analyses. Let's jump right in and see what the AUD/NZD has in store for us. This support zone is identified between the timestamps 176-222-7900 and 176-222-9700, with the upper boundary at approximately 1.14758 and the lower boundary at approximately 1.14682. This area shows significant price action, with multiple candles exhibiting strong reactions to these price levels. Specifically, the candle at 176-222-7900 closed at 1.14682 after reaching a high of 1.14687 and a low of 1.14556, indicating a clear bounce from lower levels. Following this, the candle at 176-222-8800 opened at 1.14683 and closed at 1.14673, showing a brief consolidation before moving higher. The previous candle at 176-222-6100 also tested this lower region by closing at 1.14640 after reaching a low of 1.14624. The previous candle at 176-222-5200 showed a low of 1.14636, indicating that this price range has been a floor for the price for a period, forming a consolidation or accumulation zone where buyers stepped in to prevent further downward movement, thus establishing a strong historical support. The presence of multiple lower wicks or rejections suggests buyers actively defending this area. This resistance zone is identified between the timestamps 176-229-6300 and 176-229-7200, with the upper boundary at approximately 1.14929 and the lower boundary at approximately 1.14901. This level exhibits clear resistance as demonstrated by the price action. The candle at 176-229-6300 opened at 1.14929 and closed significantly higher at 1.15049, reaching a high of 1.15052. However, the subsequent candle at 176-229-7200 opened at 1.15050 and closed lower at 1.15022, indicating rejection from the higher prices. Looking at the preceding candle at 176-229-5400, it opened at 1.14888 and closed at 1.14928, also interacting with the upper boundary of this resistance. The period around 176-229-6300 shows a strong upward move that was met with a sharp reversal, suggesting that sellers were aggressive at these higher levels. The fact that the price struggled to move decisively above 1.14929 and subsequently pulled back indicates a significant supply zone where selling pressure overcomes buying pressure. The high of the candle at 176-229-7200 at 1.15053 was met with immediate selling. The lower boundary of this resistance at 1.14901 was also tested by the open of the candle at 176-229-6300. This suggests a price range where sellers are more dominant, creating a ceiling for the price. The support zone is identified by observing a significant cluster of price action between 1.14871 and 1.14880. This range has acted as a floor multiple times, indicating strong buying interest. Specifically, the candles from 20 hours and 25 minutes to 20 hours and 33 minutes show repeated attempts to break below 1.14871, with prices consistently finding buyers and bouncing back up towards 1.14880. The candles around 20 hours and 25 minutes, open 1.14894, close 1.14883, low 1.14881, and 20 hours and 26 minutes, open 1.14883, close 1.14885, low 1.14882, demonstrate a struggle to move lower, with their lows forming a clear boundary. The later candles, such as 20 hours and 32 minutes, open 1.14887, close 1.14885, low 1.14885, and 20 hours and 33 minutes, open 1.14885, close 1.14887, low 1.14885, further reinforce this support level as prices touch and retreat from this area. The presence of multiple candle lows within this tight range signifies accumulation and a lack of strong selling pressure to push the price significantly lower, making it a robust support zone. The Bollinger Band indicators also show the lower band hovering around these price levels during this period, reinforcing the observed price behavior. The resistance zone is established by observing a clear ceiling in price action between 1.14910 and 1.14923. This area has repeatedly capped upward price movements, signaling strong selling pressure. The candles from 20 hours and 12 minutes to 20 hours and 17 minutes are particularly important here. For instance, the candle at 20 hours and 12 minutes, open 1.14883, close 1.14887, high 1.14888, and the following candles show price attempting to push higher but being met with resistance around the 1.14920 level. The candle at 20 hours and 17 minutes, open 1.14918, close 1.14921, high 1.14921, clearly touches the upper bound of this resistance zone, and the subsequent candle at 20 hours and 18 minutes, open 1.14921, close 1.14913, high 1.14923, confirms this level as a significant barrier. The upper Bollinger Band also aligns with this price range during this time, acting as a confluence for the resistance. The repeated rejection of prices above this zone indicates that sellers are actively defending this level, making it a strong area of resistance for potential future price movements. The volume at these levels also suggests active participation from traders in defending this price ceiling. Based on the recent price action exhibiting a slight upward bias with a close of 1.14880 and the underlying Fibonacci levels indicating a potential bullish continuation from 1.14886 to 1.14856, we anticipate a move towards the identified 1-minute resistance at 1.14923. The initial upward push might encounter minor pullbacks, reflected by price points like 1.14890 and 1.14900, as the market consolidates before the next leg. The strong buying interest observed near the 1-minute support at 1.14871 suggests that dips are being bought, further supporting an upward trajectory. The previous 15-minute resistance at 1.14929 also serves as a significant psychological level, and breaking above it could trigger further upside momentum, leading to price points like 1.14920 and eventually testing higher grounds around 1.14930. The tick volume data, though not explicitly detailed here for the immediate future, typically supports such moves when buyers are in control, and the Bollinger Bands are also showing a tightening formation suggesting a potential breakout. The confluence of Fibonacci retracement levels, previous resistance zones, and the current upward momentum points towards a potential bullish trend in the short term.